Good morning. Welcome to today's edition of the Mortgage Market Advisor, your residential mortgage markets and news. It's January the 19th. Let's get started. So here's what we've seen. Market's actually improving a little bit today. We'll get into that here in a second. The NAHB housing index came in as expected, so not really a big impact either way on bonds. We're seeing some new support levels, some new ceilings, and treasuries fell again. China is still showing some weakness in their economies based on some of the reports that were released. And so let's see here. Here's what if you go back and you were to take a look at some of the previous recordings I've done, they came in at about $101, which was our resistance, meaning that bonds may not actually pass or trade above that level. Well, we did. We broke through it. And that old resistance level has now become our support. We're still continuing to trade in this upward trading channel, which with that upward trading channel brings with it better interest rates or better fees associated with a mortgage. And it said that our new support may be closer to $101.80. And so let's quantify this with you real quick. If in early January you were contemplating getting a mortgage at a specific interest rate, let's just use 3.5% as an example, and and let's say you didn't lock in the interest rate, you just kind of wanted to wait and watch what happened with the market, and let's say that specific interest rate that you were looking at, you were going to have to pay 1.5 to get that rate. Well, what's happened here is with the market actually improving, that same interest rate today, you may not have to pay any points for. Since we traded up about $1.50, you were paying 1.5. Hopefully you get that that link between the two. What we're seeing now is much cheaper mortgages just since early January. So hopefully that helps quantify it for you. And so as far as the analyst outlook, Neil is staying neutral. He thinks that we may actually kind of flatten off and trade flat for a while, where Dan remains bullish. He believes bonds are going to continue to improve and maybe hit that $101.80 level. So anyway, good outlook for interest rates right now. And a quick thank you to Mortgage Coach for the charts. And for more information or a customized quote, please feel free to contact me. My information is here. And before you leave the page, super great if you could just like this video real quick. It helps us get our word out there. And if this is your first time on the channel, please feel free to subscribe. Take care, guys. Have a great